Hello, everyone, and welcome to this edition of Money Matters. I'm Ann Baldwin of Baldwin Media Marketing, and on this program, we are talking about the exciting possibilities and the opportunities out there right now for first-time home buyers. If you or someone you know is eager to get into the market to buy a new home, this is a discussion that you won't want to miss. There's a lot to know when considering this major decision, and we are fortunate to have with us on the program today Matt Burrell, Vice President and Home Loan Sales Manager for Simsbury Bank. Matt, thank you for being on the program again today.
It's my pleasure. Thank you.
Well, and you know, one of the things before we get to all the details and some of what people to know when considering first-time home buying, first of all, talk a little bit about the landscape, how things are changing with this new year, and what we need to know initially, you know, from the rooftop, if you will.
Sure, I'd be happy to. You know, this is going to be a big year for the mortgage industry and for buying homes in general. The Dodd-Frank legislation, which came out of the financial crisis of a few years back, there's a component to that that's very specific to home ownership. And that's all rolling out as of January of this year. We're going to start seeing a lot of changes in the mortgage business. And the important thing to note is that it's not all bad, it's all there to protect folks, but it's different. And now more than ever, homeowners or people looking to buy a home, especially their first home, should be looking for sound advice because the rules are changing.
And how are they changing without getting into a lot of specifics? Are interest rates going to be higher? Or is it going to be tougher to qualify? What are some of the things that will be changing?
The interesting thing about it is most of the changes are behind documentation, behind checking and double checking and triple checking to make sure that we're putting people in homes that they can afford. And there's nothing wrong with that. There's absolutely nothing wrong with that. But what it does do is it puts a lot more onus on the financial institutions and frankly on the borrowers to make sure that their affairs are in order so that they can provide the proper documentation that we're going to need as lenders to show the government that we're doing sound fiscal lending. And you know, for banks such as Simsbury Bank, smaller community banks especially, we've been doing sound financial, fiscal planning all along. But now we're going to have to prove more than ever before that the decisions we're making are sound ones. And that onus comes down to the customer being able to provide the right documentation. And that's a paradigm shift in the industry.
Okay, and that's something that we'll get into a little bit later in the program because I remember even back years ago when I bought my first home, that process can be, a little bit cumbersome. And there are a lot of things that you need to have together to make sure that you're ready for that next step. So we'll get to that in just a moment. Sure. So if you've never owned a home before and you're out there, chances are you're spending what you might be paying for a mortgage on rent. Is the timing right now for people to consider this and not be so intimidated by the possibilities?
Yeah, we always like to tell people it's always the right time to buy a house if it's the right time for you. So it comes down to your lifestyle and what you want and where you want to live, how you want to be a part of your community. So there's never a bad time to buy a house. We are in a situation still where we're enjoying historically low interest rates. Housing prices, for the most part, have stabilized, so there's a little less guessing game as to whether or not you're going to buy something and lose value immediately like it was happening a few years back. So it's a terrific time to buy a house. We're heading again into that spring market that happens every year, which simply means that there's going to be more houses on the market, more inventory for people to choose from. And that's always a positive, because with choice comes opportunities. So it's a terrific time to buy. The interest rate market is still prime. The spring market will hit. It's hit earlier every year, so we're interested to see how early it really starts to pick up this year. But it's a great time, provided that it's the right time for your family. We don't like we don't like people to jump the gun simply because interest rates are low, or simply because they saw a great deal on a house. We want it to be right for them because they're buying. For most people, this is the largest financial transaction they'll ever make.
So this is a little bit of looking inside yourself too, not just about the financial decision, but like you said, there are a lot of different factors to take into consideration and really do your homework and do your soul searching. And like you said, make sure that the comfort level is there. The other question I have is that it seems to me, and this is just my opinion, that realtors always tell you you can afford more than you're comfortable with. And again, this is from my personal experience. I'm thinking, what, you're telling me I can qualify for that? But I also know what kind of stipulations that would put on my lifestyle if I were to do that. So what's your recommendation when it comes to affordability?
Yeah, I don't think anyone's out there trying to get anyone to buy more than they can, but a lot of times prospective homeowners really have no idea of what they can afford. People do themselves an injustice if they say, you know what, I spend X number on my rent and I don't want to spend $1 more, because frankly I don't know where it's going to come from in my budget. We get people who say that to us all the time, but many times, more often than not, they're selling themselves short because they're forgetting things like once they buy a home, they have a tax advantage, and that can translate into more money coming into their paycheck, that type of thing. So it's very, very individual. We like to say, and the historic standard has been not to spend more than 28% of your gross income on your housing debt. Housing debt would be your loan, the principal and interest, plus your taxes, your insurance, condo fees if you happen to buy a condo, things like that. But even that 28% is different for everyone because you may have someone who has a lot of other debt, several car loans, student loans, other debt. Then you might have someone who doesn't use debt. They don't have any of that stuff. So that person would be selling themselves short if they stayed right to that 28% because they can afford much more house since they don't habitually spend money on other things. The person who has a lot of other debts, certainly at 28%, that even might be tight. So it's very individualized.
Right.
And what we like to say to realtors that we work with is, you guys do your job, which is fun, showing houses, and we'll do our job, which is figuring out how much someone can comfortably afford. So we like realtors to kind of stay out of that conversation so that we can analyze someone's credit and other debts and see what they can actually afford.
Right, and that's the other thing too, is there is no cookie cutter approach. And with a bank like Simsbury Bank, you walk people through that process very carefully because it's a big decision. But it's such a satisfying decision in the end when you know that you're paying for something that you've invested in, that you're going to own, that really is going to be, something that you want to hang on to. And it's a smart decision.
And it's no longer individual. It's not that I'm buying this house. When we buy a home, we become part of a community.
Right.
And whether you have children in schools or not isn't necessarily important either because you're becoming a part of the community. You're using the dry cleaner. You're using the local hairdresser. And so you become much more a part of the fabric than if you're renting a place and you say, well, geez, at the end of this lease, I might look in another town or something like that. So I think it's really, really a community kind of decision, and to know what you want to do and how you want to live your lifestyle is really, really, really important.
And you think about, okay, I'm paying, let's say, $1,500 a month for rent, and that could be going towards a mortgage, but we also have to take into consideration the down payment. So take us through the steps of home ownership and kind of what you need to consider now, what you need to have ready and in the queue, should you find that house that you say, this is perfect for us.
Right. This has always been important, but even more important now with the new legislation coming down the pike. It is never too early to start preparing for this. So even if you're sitting at home saying, in 2 or 3 years I'd like to buy a home, now's the time to enlist the help of a professional and to start talking about what you should be putting in that file folder, electronically or otherwise, to make that home ownership become a reality. Because gone are the days where you could show up at a bank today and say, I want to apply for a mortgage without having done any kind of documentation, archiving, or anything else like that. You can get it done that way, but the transaction is going to provide you a lot more grief than if you had prepared yourself for it.
Right.
So at the very basic, we always need to know a lot about your life, a lot about your income, a lot about your job history, a lot about your assets. And when I say a lot about, I mean 2 years solid history. If you've jumped around a lot, we need to know months and years of every move that you've made. So to start kind of keeping your resume up to date for your lender is an important thing. We're in an age now where we move money around all the time. We have electronic bank accounts, we have local bank accounts, we have community bank accounts. Some of them give us statements every month, some of them don't. If I never look online, I never know what my balance is, that kind of thing. Well, unfortunately, when you're going for a mortgage, we need to document everything. So if you haven't been saving your statements all along, and we ask you for a 3 or a 2 month history of that bank account, we need you to provide that. And a lot of times for especially millennials, that means they have to actually find out where their bank is and get an actual paper statement.
Right.
We're not used to that. They go online and they see their balances, but they may be hard pressed to find a way to print an actual statement off of their online bank account. Assets are another thing. Deposits are another thing, rather. You may be able to provide 2 months worth of your bank statements, but if there are a whole bunch of deposits that have been coming from other accounts or other places, unfortunately, we have to do what's called sourcing all of those deposits. So we have to look back, and now we're going to request statements from whatever bank it came from, and now you've got to get those statements. So we counsel everyone, and I encourage people to get in touch with a banker earlier in the process because we encourage you to build that binder. Have your income section, have your asset section, and as you get new statements, replace the old ones, so that when the day comes that you find the home of your dreams, you can provide that information. When I got married, my wife had a binder of different meeting halls and different places to get caterers and different videographers and all that kind of stuff. And I used to tease her about it, but now I counsel people to do the same when they're thinking of buying a home. Start that documentation and get a clear account of what you will need to provide. For instance, real quick, if you're self-employed, it's a whole different ballgame.
And it's going to change after the first of the year, correct?
It's a whole different ballgame, right. And now we're going to have to show a solid 2-year history of that self-employment. And if you can't provide that, then we've got an issue. So it's time, it's never too early to start this process, and to do that with a lender that you're going to trust to give you sound information and to see you through the entire transaction.
So isn't this what we call the pre-qualification process
It is.
too? And you can pre-qualify even if you're not ready to jump right in. At least you know you've pre-qualified for a certain amount of money.
Right.
And then when that home becomes available or you find it, that whole process has been made easy because you've done it.
Yeah, and the beauty of that, there are so few things that are free in this world. The pre-qualification is entirely free. There's no cost or obligation. Speaking for Simsbury Bank, we don't charge anything to do that initial credit pull. And you can sit with a mortgage loan advisor that you can find on our website. There are several to choose from. And they'll sit with you, they'll pull your credit, they'll talk to you about where your assets are, they'll talk to you about how long you've been at your job. And quite frankly, they'll encourage you to lean towards some stability. So if you're thinking about leaving your job but you want to buy a house in the next year, you may decide to stick with it and to stick it out with your current employer before you make that switch. Or they'll counsel you on what type of a switch to make. You want to improve your situation. You don't want to step back, with the hopes of improving it in the future, but underemploying yourself in the near future or something like that.
Right.
So there's so many pieces of advice that you can get through a pre-qualification that costs you nothing, that makes it almost foolhardy not to do it. And the best way to do that is simply to call someone up and say, hey, I want to buy a house, and it may not be for several years, but I want to get my ducks in a row. We love the ducks in a row conversation.
Really?
We never want to push someone into doing it before they're ready or anything like that. So we love to have that. And then we just ask that we stay in touch and make certain that you're on that course. And that's how you set yourself up for success. We hear all the time that people say, oh, my neighbor got a mortgage, it was such a burden. Well, it's only a burden when you don't have those ducks in a row. So let's help you get them there.
What are some of the biggest mistakes that people make, and how can you kind of, smooth those out, if you will? You've already touched on some, but
the biggest mistakes is, we need to pry into every aspect of your financial life, and people still feel like it's none of our business. And on some levels, they're right, but sometimes you have to get candid with a customer and say, you know what, you're borrowing a lot of money. We need to know a lot of stuff about you, and you don't have to answer any of these questions, but then you can't get the money. So it's kind of so the biggest thing that people just need to deal with is just, what, I understand if I want to go through this process, I'm going to have to bare my soul, and I'm going to have to give the people the information that they need to make these sound decisions. And then just accept the fact that you've chosen someone you can trust to guide you through that process. And that's really what's important, and that's what we try to tell people. Lending 5, 6, 7 years ago, there were different products out there. There were no documentation verification loans. There were no income documentation verification loans. And sometimes we work with people who have gotten a loan during those times, and they're like, well, why are you asking me for anything? I did it on a signature last time. And that's a paradigm shift. And unfortunately, that's where we've come almost full circle. But that's where we are. So
and I think too, with the foreclosures and just the all the vulnerability in the markets, you want to protect the consumer, but you have to protect the bank and you have to protect the mortgage holder. So everybody's really got their best interest at stake.
Yeah.
So you talked about you want to know a lot about these people and you need to know a lot. And so that just kind of points to me is that the relationship between the mortgage broker and the individual, the home buyer, hopefully, is really critical too. You have to have a comfort level. And one of the things, and I'm not just saying this because you're on the show, is that I see that with a lot of your mortgage brokers, and this is an area that Simsbury Bank continues to grow beyond the borders of Connecticut in. How important is that relationship? And the people that you hire, that's got to be a consideration. They have to be people.
Right.
People.
This is a relationship business, and unfortunately, our own industry has tried to suggest that it's transactional over the years. You get a lot of companies that really just advertise interest rate and that kind of stuff, but it's so much deeper than that. We're like any other industry where we try to price ourselves competitively in fees and in rates, and because if we didn't, we wouldn't have any customers.
Right.
So that's almost just a consumer just has to accept that a bank is going to keep themselves in the market for the most part. Then they have to choose the person that they can trust to work with, because you build a relationship over time, especially for a young couple just starting out. If we need to counsel them for a year through a credit issue, or get them to get that documentation, or get them to create their self-employed business in enough time such that we can get them a loan at the end of it, then we're going to work with them for a long time. And they need to trust that we're going to always do right by them by rate and fees. That doesn't mean we're going to beat everybody all the time, every day, because that's impossible to monitor. But we try to stay competitive every single day. What's more important is that they're getting sound advice, because they're going to be stuck with this mortgage for as long as they're in the home, and it has to be the appropriate one for them. It's so much a relationship business.
Absolutely.
And sometimes our own industry suggests otherwise, but it's just not true.
Yeah, well, I remember back in the day when I bought my first home, and I keep alluding to that, is that, there was that, brief meeting with the mortgage person, and then it got sold to somebody else, and I never saw that person or heard from that person ever again.
Yeah.
And I didn't like that feeling.
That's an important point, because we do have a secondary market, and paper gets sold back and forth, and that's how we stay liquid. If we held every single bank on every single loan on the books forever, we wouldn't have any more money to lend. But there's a difference between selling the entire loan and just selling the paper and maintaining the servicing. And smaller banks, such as Simsbury Bank, we maintain that servicing relationship. So if our customer has a problem, they call us, and we try to solve that problem. And that's really, really important. Because some people are of the mind, like, well, I get the loan, I get my house, and then why do I ever have to talk to my banker again? Well, you never know. You may have insurance questions. You may have escrow questions. You may have things like that. You may have a mortgage payment that you don't know where to send or whatever. So it's important that your servicer is someone that you know how to get a hold of. And there again, in our industry, we've drifted away from that a bit. Your smaller community banks, such as Simsbury Bank, we maintain those servicing relationships. They're our customers ultimately.
One of the things that I appreciate that Simsbury Bank done from personal experience is that you assisted Simsbury Bank, you personally assisted my son, who recently graduated from college and bought his first home. And it was kind of a reality check for him when you had him fill out the worksheet. When you start putting down utilities, condo fees, taxes, all those things have to be taken into consideration. And because he's, been away at college and living with mom for a while, that was a real reality check and something to take into consideration as far as affordability goes. So I think that's very important for first-time homebuyers. You don't always think about the other costs associated. Upkeep, repairs, things that you don't anticipate that you need to fix. I mean, it's all part of the equation.
Yeah, and part of these new changes and the ability to repay and such, it speaks directly to that. It used to be that you could use your last dime to get into a home.
Right.
But that's where people get in trouble, because you have to buy a garden hose.
Right.
You have to prepare for the rainy day. And now a lot of the underwriting changes require reserves, especially in a situation where someone's putting less than 20% down. They're going to require several months worth of reserves to be in your bank accounts, whether or not you can access. They can be retirement funds, But the idea is you're not going to lose your house if you get in trouble in that very first month that you don't have your mortgage payment immediately available. So that's part of the restrictions have been that we do need folks to have more money in the bank, more skin in the game, so to speak, to make it work. Because no one wants to set anyone up for failure. There's this perception out there that foreclosures are something banks do willy-nilly. But the reality of the situation is we're not in the business of real estate. We don't want to own your home.
Right.
We want you to own your home. And we want to enjoy the benefits of the interest that you pay on your loan. So we want people to get into homes that they can afford and that they're going to enjoy living in. There's no worse feeling than to have buyer's remorse or to be house poor.
Right.
Because that doesn't advance any of the goals you intended when you bought your house. So it's really, really important. And yeah, in a situation like a first-time home buyer, they'll say to me sometimes, well, I pay $900 in rent now. I'd like to buy a home and I can spend $1,100. And then I say, well, where would you like to live? And they say Simsbury. And I say, okay, well, the average first-time purchase in Simsbury, your taxes are going to be however much, $400 a month. Is that part of your $1,100 that you just told me you could spend? Or was that just what you wanted to spend on your loan? And that's where that reality check comes in. And they're like, oh, it's not $1,100. After taxes, it's $700 or some such thing. So it's important to point that out.
What about the mortgage insurance that goes with, if you put a certain amount down, as I understand it, then you don't pay what's called PMI.
Right.
But if you don't fit that, you have to be insured and you have to have PMI insurance. Can you talk a little bit about that?
Yeah, because many first-time home buyers have to have PMI insurance. And ultimately, it's like any other insurance. If you buy car insurance, it protects you should something happen to your car. Well, with PMI insurance, it's protecting your lender because we've taken on a greater risk than we otherwise would. If you put less than 20% down on your home, it means that you have really very little equity that you own and that we've taken the majority of the risk. So we're going to insure ourselves against loss, which simply means that if you get into trouble and can't pay your mortgage and we have to sell it for less than you owe, then we will be compensated through this insurance. It's a reality, it's a means to an end, and it helps millions and millions of people get into a home with less than 20% down. So it's really the consumer's friend, because otherwise they'd be shut out of the marketplace.
Right.
But it is part of that monthly payment. It is part of that 28% that we need to qualify you on. So it's a reality that we need to deal with. If someone can put 20% down, that is ideal. But if they can't, they're not shut out of the market because of this insurance.
And when does PMI go away? Do you pay that for the life of the mortgage, or once you have a certain amount of equity, does that
It depends on the mortgage product. FHA loans, which many people know at least peripherally, they have had a recent change where they keep it on for the life of the loan. So regardless of your equity, your PMI won't go away. But with a conventional conforming loan, if you can sometime in the future show that you have 20% equity in that property, then the PMI goes away because the risk has been reduced.
Right.
You no longer need that insurance. The lender no longer requires it.
And Matt, what about incentives for first-time home buyers? There are a lot of programs that have existed. You talk about all these changes after the new year. Is that going to be impacted as well, or are there still incentives for first-time home buyers?
You know, incentives for first-time home buyers have always been a bit of a misnomer, only because people would, launch a product, a first-time home buyer product, and it really didn't have any embedded benefit that anyone could get. No one other than a first-time home buyer could get. So most first-time home buyer programs are open to everyone. But what certain programs allow is a lower down payment. The PMI is still there, but they allow for a lower down payment. And some of them allow for higher debt-to-income ratios. In other words, we do allow you to borrow a little bit more based on your income currently, because there's an expectation of increased income down the road. The young doctor, the young lawyer, who's burdened by a lot of loans now, but their income will also increase exponentially. So it's important, once again, to get down to product and to get counseling and to find out what's appropriate for you.
And we talked a little bit earlier about pre-qualification. Once you pre-qualify for a loan, is that the point where you have to lock in on the current interest rate, or is it when you're going to purchase a home?
Yeah, in fact, you can't lock in until you have a home under contract.
Okay.
So for many folks, they may be incubating this process for several months or years, but ultimately rates will move where they will, and when they're under contract to purchase a home is when they're eligible to lock.
I see. And what if you lock in and before you're signing, the interest rate, let's say, goes down again? Are you...
A lock is a lock in most cases.
Okay.
So what you're doing when you lock a rate is you're hedging your bet against the market worsening while you're getting your loan approved, but you're also protecting the bank so that if the rates were to drop, we've already promised your loan at your rate. So you don't automatically roll down. It's a hedging strategy like anything. You're hedging your bets, and there's a price to pay for that if the market moves, to a benefit.
Right.
You don't get that benefit.
Okay. Now, I know that Simsbury Bank, you've expanded your mortgage line, fairly recently into other states. Are there advantages of doing business in other states, or do you, again, psychologically make that decision to buy that first-time home in a place that you want to be? What kind of advice do you give? Do you look at a geographic area?
We're expanding because we think we bring a benefit to people, and we want more people to take advantage of it. From the customer standpoint, you're going to find the home that the town that you are most comfortable in typically, and you're going to look for a home in that town. I did the opposite, quite frankly. I live in the west end of Hartford, and I found the home I loved, and I had no kids at the time, so it didn't matter to me about schools and everything else. And I moved into the home that I loved. What I found was I had a wonderful community around that home, so I was lucky. Most people are going to want to do their due diligence. They're going to want to find a home in a town that they're comfortable with and that they're used to and that they want to be a part of because it's part of their life.
Right. And look at the resources and look at the schools. Yeah. I know when I bought my first condo, I also newly married, no children, but then, fast forward 2-3 years later, 5 years later, the kids are entering school. I'm still in that same first home. So it is something that people need to take into consideration, as well as comparable values in the neighborhood. Right. Is the neighborhood going to go up, or is it going to deterioate, right? That's a huge factor.
Buy the worst house in the best neighborhood?
Yes.
To some extent that still applies because what happens around you affects your value. Absolutely. And we never want our property values to diminish.
All right, and we're just about wrapped up, but it's got to be a great feeling when you set somebody up for a closing and you see the smile on their face, and I think it might be a little bit like having a baby. You forget about the pain that it took to get this child here, but what a great feeling to know that you're sticking that key in the door of your first time home, there's nothing like it.
Yeah, your point is valid. It could be a high anxiety, high stress situation, because for most of us, it's the largest transaction we'll ever do. But the benefits and the rewards are just wonderful. And it's good for you, it's good for the community that you buy in, it's good for everyone, and that's why we like to do what we do every day.
And if people want to contact you personally, you're available for that, so how can they reach you, Matt?
Yep, SimsburyBank.com is a great place to find access to all of our loan originators. My number, I think we put on the screen, is 860-651-2093. I'm always willing to speak to people, but get to us early. Let us get you set up for success, and that's really the best thing we can impress upon people.
And don't feel guilty about the time that it takes and the time that you spend. And it's refreshing for me to hear that you appreciate that time, because it does take time to get to the step to where you want to be.
And when you do it right, it makes all of our jobs easier.
Yes.
It's when you come in without doing it right, and now everyone's scrambling, and that's high stress for everybody. So we prefer to be prepared.
Great. Well, thank you so much.
Thank you, Ann.
Matt Burrell, who's Vice President and Home Loan Sales Manager, Simsbury Bank. Again, thank you for some great information, and hopefully this discussion has made folks realize that it does take some effort, but in the end, there is nothing like owning your own home. Again, if you would like to contact Simsbury Bank or Matt personally, you can contact him directly at 860-651-2093. Or for more information, go to their website at simsburybank.com. Thanks so much for joining us for this segment of Money Matters. I'm Ann Baldwin, and we'll see you here again next time.
Funding for Simsbury Community Television is provided in part by contributions from viewers like you. Thank you.